Welcome back, folks. In this video, I want to talk about how to identify your bias. Essentially, when you're trying to identify your bias, you're trying to map out institutional order flow, and you need to do it on a high time frame. And I prefer the daily time frame because I am an intraday trader. Now, I'm going to look at two markets. Okay. Now, I only prefer fair value gaps. That's my choice of PDRA. I don't care about breakers. I don't care about order blocks. Okay, I don't care about rejection blocks, fair value gaps. That's all I care about. Okay, so we're going to start just from September. Okay, now you can see from September on the EuroCAD, we've got a nice move up. Okay, we then form bullish fair value gap from where the market pulls back down into, again, reprices higher. Okay, and forms another bullish fair value gap. Okay, then the market again uses that to reprice higher, taking out the liquidity on the left. Okay, so the most current move that I spoke about is this little tiny bullish fair value gap that the market has repriced higher to take out the liquidity on the left. Notice that what the market has formed there on the way down. You've always got to look at what has the market formed on the left. Okay, so the market has formed equal highs and then has come into this bullish fair value gap, and the expectation is because order flow is bullish, right? Bullish, then from here, we should also be bullish, taking out these equal highs. Always look for equal highs, equal lows. That's what the market will most likely, in most cases, target because it engineers those equal highs or equal lows where resides liquidity that the market will then use. Okay? Now, from this top here that the market has formed, we then reprice lower. Okay? We reprice lower. Notice at this point, we do not take out the swing low on the left. Now, I want you to really think about this. The market will create and engineer liquidity on both ends, and your job is to identify that. That's going to be your highest probability trade. Okay, so the market has got this swing high, okay, and moved down, formed and engineered equal lows. Okay, then what does the market do? It reprices higher, taking out this swing high on the left. Okay, in doing so, it's created a bullish fair value gap, right? So there's a bullish fair value gap right there. Okay, so what do we expect the market to do? If we are in a bullish momentum, right, then we should come down here and continue to go up, right? But what happens instead? The market, after taking out this liquidity, okay, external range liquidity, it then reprices lower and does not respect this bullish fair value gap to go higher. Instead, the market creates a bearish fair value gap. Okay, from where we can now assume that the market sentiment has turned around. Direction is now to the downside. We can enter a short position because we can see very clean equal lows, just like we saw these equal highs, right, prior to the formation of this bullish fair value gap. Okay, in the same manner, we can see these equal lows, okay, that have been formed prior to the formation of this bearish fair value gap, from where we can, on this pullback, into short and target the equal lows. Okay, now, what's the market doing? Well, I see this as a consolidation. Okay, but why is the market repeatedly stopping at this level? What's there? Well, if we look to the left, we can see two things. One, we can see this inversion fair value gap, right? This previous bullish fair value gap on the left-hand side becomes inversion on the right-hand side, okay? Where we can see institutions are accumulating short positions, okay? Not only do we have the inversion fair value gap, we also have the bearish fair value gap that's been reclaimed multiple times. Again, institutions are accumulating short positions. We have also engineered liquidity, and we also have this bullish fair value gap, which has now failed because we've closed below it. Okay, so clearly the market has now turned around. In my view, order flow is now bearish. We have plenty of sell side liquidity residing below. Okay, and this is not a trade recommendation. This channel is all about education on price action. Now, what I would expect is for the market to continue its bearish institutional order flow, particularly now that we've closed through this bullish, we haven't respected, well, we've disrespected this bullish fair value gap. We should have come down and repriced higher. So my expectation would be that we continue to raid sell side, okay, and potentially come back down to rebalance any open inefficiency and offer sell side price delivery where there's only been delivery of buy side. So we'll watch this market and monitor it, but based on what I see here, that is potentially the next level that this market is going to aim towards. Again, this is not a trade recommendation. Okay, let's monitor this market and see if we can get another fair value gap that the market can respect for a move down, taking out all of this sell side to rebalance the inefficiency that's been left on the way up. Okay, now let's look at one more example. Let's take a look at the Swiss Franc. So the Swiss Franc, you can see, has, let's look at it from this price action, okay, where we've had a movement down. Okay, notice I'm still using the daily charts. Now, on this move down, it has left this swing low. Okay, we've then pulled back up into this bearish fair value gap from where the market has repriced lower, taking out sell side, right? Essentially, when you have a high that is higher, sorry, a low that's higher than the low on the left, that essentially is relative equal lows. Okay, and you can clearly see that the market's pulling back up into this bearish fair value gap. Okay, and so order flow is bearish, right? We've taken out liquidity. Now, as we've done that, we've created more premium PD arrays. Okay, so the market then comes up into this fair value gap, reprices lower. Remember, I'm only looking at fair value gap. That's all I care about. That's all I use to identify institutional order flow. You'll find that is the easiest, right, to use. Now, we've moved down, but we have left, just like here, we have left this swing low intact. Okay, but what's the market doing here? It's creating and engineering liquidity on both sides of the market. Okay, so there's a swing high here and there's a swing low here, right? On this move down, when the market turns around and doesn't take out this low here, then that's engineering sell side liquidity. Okay, it's basically leaving the liquidity intact to come back later. But this swing high has been engineered because the market ultimately wants to come back up and rebalance this inefficiency. Okay, now that is very similar to what we had on the EuroCAD. Okay, where the market creates this swing high, doesn't take out this low, forms equal lows, so it's creating an engineering liquidity on both ends. Okay, it moves up to take out this liquidity, only to then move back down to take out the engineered sell side liquidity. It's the equal lows and equal highs that you want to look for, because that's going to tell you what the next move is. So if you see liquidity rated external range liquidity and you see equal lows below the market, especially when there's a fair value gap in around those equal lows, then it's high probability that once the market takes out this swing high, it's going to turn around to take out the engineered sell side liquidity. Okay, so in the same manner, you'll see CHF has also formed liquidity on both ends. Okay, it's left this low intact. This movement should have taken that out. Okay, and in that movement, it's formed this swing high. Okay, ultimately, it was looking to come back up to this inefficiency. Okay, and once it's reached the level of its objective, then we've repriced lower into where? Into this bullish fair value gap. Okay, and again moved up, and then we moved straight down. Now, if we were bullish, then this fair value gap formed here should have been respected. The market should have pulled back down and repriced higher and taken out all of this buy side that's been engineered. Okay, instead what happens? And this is very, very clean, right? It goes straight down through that bearish fair value gap, forming a new, this bullish fair value gap, forming a new bearish fair value gap, right? And again, what's the market done here? It's come down and left this low intact, okay? And what do we have here? This low is higher than this low, right? So we have relative equal lows, just like we had relative equal lows here, that was rated with this move down. Now we can expect from this level that's pulled back up into this bearish fair value gap to go down and sweep these relative equal lows. Of course, I'm talking about everything in hindsight, but that's the only way you're going to learn, okay? It's not very difficult, okay? All you have to do is identify equal lows, equal highs, and use the fair value gaps, okay? Because those fair value gaps are the true turning points in the market, okay? So now what do we have? We have now swept the swing low, okay? And we've now formed a new bullish fair value gap we've pulled into there, okay? And so now we can expect the market to start rating all this buy side, right? So bullish fair value gap, right? Entry from this level, Okay, we've moved up, another bullish fair value gap. Okay, we've moved up, another bullish fair value gap. Okay, this time we have moved down, but we have not respected that bullish fair value gap. Instead, we've gone straight through there. Okay, and in doing so, we have formed a new bearish fair value gap right there. Okay, we've come back up into there. Okay, well, we haven't really, now look at this interesting price action. So we've come back up into there, and this little movement has a small little bullish fair value gap. But look what the market's done. It has created these relative equal highs, and we have a small little bullish fair value gap that's then used to push prices higher, taking out this liquidity. Okay, notice that we've also used this bullish fair value gap here as well as support to reprice higher. Okay, then the market takes liquidity. Okay, and we start to turn around. Okay, so all you have to do is identify fair value gaps and look for relative equal lows or equal highs, okay, to identify the next potential move. Okay, now what do we see currently? Again, this is not a trade recommendation, okay, but we can see that we've had this move down. Now the market has left this low intact. Okay, so what is this forming? It's engineering relative equal lows, right? This low is higher than this low on the left. Okay, just like the low over here, and just like the other example showed on the left. Okay, now what I believe is that the market is forming sell side liquidity. Okay, and I don't see any more fair value gaps above the market, right? This one has been rebalanced. Okay, this one's been rebalanced, so there's really no need for this to go higher. Okay, but there's liquidity that's been engineered here, okay, and here. So what do we wait for? We wait for the market to show its hand, right? I want to see, if I want to short this market, I want to see a movement aggressively down, okay, probably down to this bullish fair value gap with a bearish fair value gap that the market then I want to see retrace into for an entry to then look for a move down to these equal lows. That's not a trade recommendation. We're learning about price action. So I'm on to this market, okay? Just like what we saw here, okay? Where we have swing low, okay? Let me clean this up. So look at what's happened in the past. Learn from price history. We have a bullish fair value gap, okay? That has formed a swing low, okay? Then the market has gone through there, okay? Remember we have equal lows here, right? Relative equal lows, because this low is higher than the low on the left, okay? And so we have a nice expansion lower with this bearish fair value gap, pull back into the bearish fair value gap and move down to take out the liquidity residing here. So we have exactly the same thing here. We have this swing low, okay? So I want to see the market now on this daily chart reprice lower, taking out this liquidity that's been engineered, okay? And in doing so, form a bearish fair value gap, just like here, right? So movement up into the bearish fair value gap, okay? Just like here, okay? And then an entry to go lower to take out relative equal lows. So that's how I identify institutional order flow, just by using fair value gaps and identifying equal lows and equal highs. Okay, hope the video is insightful. Hope you've learned something. I will now talk with you in a future video.